about stocks this week. Markets end in the red. We'll tell you if it's a good opportunity to pick up quality stocks and add them to your portfolios. Earnings season kicks off with Infosys reporting stellar numbers. What should you expect from the IT pack? And our investment advisor Sharmila Joshi tells you why you should buy Century Plyboards for the long term. Welcome to All About Stocks. You're watching ET now. Thank you so much for tuning in. I'm Faye D'Souza. Happy New Year to you. If you've just tuned in, this is our first show after the New Year, and we know that you've been worried about your portfolios because we did see a little bit of volatility and we have ended in the red. But really, if you're a long-term investor, there isn't anything to worry about, really. It's just an opportunity for you to add more stocks to your portfolio. We're going to answer the questions you sent in during the week and, of course, address any fears you might have about the market right now. Email ID is at the bottom of your screen. First, let me bring in Ajay. Ajay has the latest update on everything that happened in the market. Ajay.
Well, Faye, it was a difficult week for Indian equities. We were down about 1.5% each on the benchmark indices. Actually, the damage could have been much more had we not rebounded from the intra-week lows of closer to 8,000 levels on the Nifty because of positive commentary and hopes that the ECB will come out with a much more generous dose of stimulus to help the Eurozone come out. So because of global cues turning positive or turning the tide, we actually rebound. But net as well, there was definitely a lot of damage on the benchmark indices. Even the broader markets did not fare too well. In fact, they were down for the week as well. And if you take into account all the interest rate sensitives like banks, which led the decline, real estate, power, capital goods, most of the sectors or economy sectors actually ended the week lower. It was the defenses which were shining this week, with stocks like HUL and Asian Paints doing the trick as far as the FMCG sector goes, and some of the IT companies gaining smartly on Friday thanks to a good set of numbers from Infosys. Even the BSE IT index ended the week higher. But if you look at the internals of the market, you would see that the fund flow remains weak from the FII side, which were sellers throughout the week, and DIs have been buying a very paltry sum compared to what FII have been selling. And there still exists a lot of short positions in the market. So traders believe that the market would be extremely narrow range bound going forward. However, good set of numbers from Infosys did soothe sentiment to a certain extent. The progress or the further direction of the market will depend on how the rest of the earnings season pans out. That's what traders are telling us.
All right, Ajay, thank you for that update. Joining us today is Sharmila Joshi, who's been advising us with our stocks for a couple of years now. Sharmila, thank you so much for joining us. It has been a topsy-turvy market. And I'll tell you, on Twitter, we had, I had a lot of investors who reached out saying that, oh my God, the market is down 800 points. What does this mean? And, there are certain stocks that are down 40, 50 points. And there was a certain amount of panic, and in all fairness, because the media does tend to, paint the market in red when something like this happens. Explain to us what this volatility was, what it means for our portfolio, and what we should do.
Yes, I think all said and done, it was very disconcerting to see markets really just give away like that on one day. Especially because I think that the consensus, post that event has been that, yes, there is global concern. One, because the way oil markets are falling, while in the beginning we were all very happy to see oil correct from, that Brent from about 120 levels to about 50 levels. I think somewhere, the kind of effect that it's going to have on economies which are dependent on, on crude, and the ripple effect that it will have across geographies and across markets, sort of took everybody, made everybody sit up and take notice. Also, we have some very important data points coming from the US, which market is obviously worried about, and this whole developing situation in Greece is also giving concern. But all of it to result in this kind of a fall on a single day was really, I think, a little overdone, and I think enough to sort of unnerve anybody, because we did come up from very high levels. So I think that's the point to keep in mind, that at the end of the day, even if you're saying a 250 point fall in the Nifty, it still takes you back to a level at which you're still higher than what you were, say, in August or September this year. So I think you have to keep it in perspective and really see your portfolio and see which are the stocks that have taken the hit and why, and then really decide your strategy going ahead, because I think the macro picture for India still remains unchanged. I think overall a falling crude is a positive for Indian economy, or economies like India, because it gives us a chance to really build our inventories. And I think going forward, we have a budget coming up. We have an earnings season that has just kick-started. So I think we have a lot, that can sort of really affect the market either ways. But I think a lot more positives than negatives at this point in time.
Okay, so tell me this. We are looking forward now to the union budget, which will be in most likelihood at the end of February, the next big trigger. What are the expectations from the market? And in the meantime, what should our strategy be in the run-up to the budget?
To break up that question, one is, of course, the fact that this is a long series. The Jan series is a long series. We have 2 data points, which we discussed, the US as well as the Greece waiting to play out. So I think globally, those are 2 events to track. And because the expiry, this is a long one, 31 days, and the expiry goes into the last month, you will see volatility, depending on how those events play out. So I think how market really reacts in February will be a function of the outcome of those events as well as the earnings season. So, you will sort of try and balance. For instance, today you did get a good start to the earnings season with numbers from Infosys. So, if those things happen, then you will see individual stocks react positively. But I think the more important question, as you said, is what the expectations from the budget are. And I think definitely this time market is not, is in no mood really to accept a budget of the last, what we got last time, simply because they had less number of days to present that. And I think it has to be a budget that sort of clearly defines the path that the government wants to take for the next 5 years. So you have to see policy coming in a manner which sort of indicates the roadmap for the coming year. So it may not necessarily be according to me something very, very different.
Yes.
But it has to be different in the sense that it has to create the identity of this government, separate from the identity of the last government. So I think, that's what I'm looking for that very clear sense of direction, that this is how we will sort the power issue, this is how we will sort the infrastructure issue. And if we are saying make in India, then this is how we are going to go about it. This is how GST is going to roll out. Stuff like that, really more than anything else.
Let's also talk about Infosys. Impressive numbers there. The street was quite pleasantly surprised. What are your expectations from the rest of the IT pack going forward?
So TCS has already given us a sort of a warning saying that this may not be the best quarter for them. So let's wait and see. Tech Mahindra has done an interesting acquisition in the consulting space just today. So I think that still remains my top pick. But very honestly, given the way the currency situation is and given the way, business is expected to improve both in Europe as well as in the US, I would continue to be positive on IT as well as pharma as a space going ahead. So for me, these are stocks to really buy and keep in your portfolio. Maybe they won't do fantastically, but I think they will give you like a 20% kind of a return from current levels.
All right, and you did mention that Tech Mahindra is your top pick with the IT pack in the pharma pack?
In the pharma pack, given the correction that we've had, I do like a Sun Pharma at current price. I also like a Lupin. So there are a host of stocks actually that you can look at over there. I think Sun Pharma is good. I think Lupin is good. I think Biocon is good at current price. So, as I said, there could be a number of stocks there.
Let's move on now to Sharmila's recommendation for this week. Now, we asked her to pick one stock that we can buy at current levels and hold for the long term. She was kind enough to pick a stock for us. She's picked Century Plyboards. That stock into the week at 169. It's had a fantastic last 1 year. Really, if you look at the way the stock has moved. What are your expectations from it going forward, and why do you think it makes the list right now in terms of valuation as well, given the run-up that we've seen?
I think we shouldn't take the run-up too seriously, because very honestly, about 1 year back, a lot of the mid-caps were trading at such discounts to their businesses that it wasn't really a fair price to start with. So, okay, you can argue that maybe at current price they're looking a little expensive, but I think, we should really start looking at them, say a stock like a Century Ply from, say, a price of about 120 or 130 sort of onwards, and then see whether at 170 it's expensive. So I think that really speaking, I mean, the business is obvious from the name Plyboards. It's in laminates and it's in plyboards, and I think that's the kind of business that sort of attracts me, because it sort of indicates the changing lifestyles and the kind of money people are willing to spend on sort of home improvement, and the fact that overall we are beginning to see commercial space also picking up, the kind of numbers that they've given. They've got another facility coming up which will be fully operational. So I think all things put together, it shows that they've given 16% kind of margins. They're expected to stick with those. They'll do a 25% kind of a growth. So I think if you start looking as the year goes by and front lines become sort of fully priced, you'll start looking at stocks in the mid-cap space which have good results and which have been doing well for 3-4 quarters. I think Century Plyboard will stand out, and with a year's time frame, I think 205 is a very good target.
All right, that's Sharmila's recommendation for this week with a target of 205. If you have questions about what you heard on the show, feel free to write to us. Our email ID is at the bottom of your screen. Welcome back. You're watching All About Stocks in ET now. Thank you for staying with us. Sharmila Joshi is still with us. We're trying to figure out a strategy for our long-term portfolios. It's time to take a look at Sharmila's own portfolio. Now, this portfolio is currently at an overall gain of 36.6%. It was designed on the 21st of December 2012. So it's over 2 years old at this point. The Nifty over the same period has given a return of 41%. Now, these are the stocks in Sharmila's portfolio. There's L&T, IDFC, Dabur, Syntex, Ipca Labs, JSPL, Kanhaiya Ceramic, M&M and SBI. Well, some of the stocks have done really well. But from what I understand, you want to make some sort of sea change to your portfolio right now. Tell us why, first of all, and then tell us what the change is.
Well, honestly, I was thinking that it's 2 years since we started this, and the stocks have remained the same. And sometimes I've beaten the Nifty, and now I'm underperforming. But that aside, I think I'm just I'm happy with the stocks that I hold, but I'm just like bored talking of them. And I'm sure that anybody who's bought these stocks, I mean, very honestly, if Kanhaiya Ceramics is making a 159% return, I think in between it was making an even bigger return because it was higher than where it is currently. I don't think that people will hold on for that long. I'm sure if anybody's bought Kanhaiya Ceramics in 2012, they switched out of it by now. So, in a sense, that portfolio sort of loses its relevance because, you won't sit on a loss for this long and you won't sit on a profit for this long. So I think, and markets are exciting. We are expecting next couple of years to be good. So while I don't, I still stand by these stocks, and I think if you bought them and if you have them in your portfolio, you should continue to hold them. I think they will, especially stocks like a Dabur, etc., which haven't really done all that well, or a JSPL, which is massively underperforming. I think those will give you returns, but I would just like to add a little more interest and change all my stocks.
No, but is this, in terms of strategy, since these are model portfolios for long-term investors, in terms of strategy, is this something you recommend investors do, where they switch out all of the stocks in their portfolio?
Possibly not all in one go, but I think it's good. It's a good idea to sell, every now and then something that is making you return, and then, or at least take some profit off the table. So suppose you're doubling your money in a stock, then you take at least your profit off the table and put it in another stock, because else how will that compounding work in your favor? So you can retain part of the stock, in which you're making. For instance, in Larsen, you're making an 80% return. So you can keep the initial amount that you invested in Larsen, and whatever profit that you make, you should ideally invest in another stock. And only then, I think, can your really investments give you a better return over a longer period.
And if you have questions about why Sharmila is doing this, you want to ask her something in particular, feel free to write to us, or you can tweet me and we'll get Sharmila to answer your questions for you. So take us through what you're doing right now. What sort of changes would you like to make?
So I'm trying to keep the sector sort of representation the same, maybe adding an IT since I didn't have an IT stock earlier, and sort of trying to keep like for like mid caps in place of mid caps, etc., but changing the stocks altogether, because I think that there are many good stocks out there which you can buy. So I think it's just time for a change.
All right, so take us through the change you're making.
So the 10 stocks that I now recommend, where you put 10% in each, would be Thermax, SKS Microfinance, Berger Paints, Havells, Lupin, Tata Steel, Century Plyboard, Ashok Leyland, ICICI and Persistent Systems.
Tell us why you've picked a paint company in particular and why that's a good replacement for Dabur.
Very honestly, it's because of the way crude prices have been, and I think that now your portfolio needs to have some stock which sort of captures the positivity that will emerge from a falling crude basket. And paint companies will sort of result, for paint companies it will result in lower raw material costs, and I think that going forward you are expecting to see an expansion in their margins. So I think that you need some exposure. I think that's one of the reasons why even Hindustan Unilever has gone up so much, because a lot of their raw material for one division is sort of crude based, and you're expecting to see that expansion in margins. So I think similar should be the case for all paint companies. So I've introduced a mid-cap paint company, Berger Paints.
All right. Tell me what the thought process was behind replacing JSPL for Tata Steel, because given where the commodity cycle is right now, I would have assumed you'd stay away from commodities altogether.
Yeah, but I just want to, as you said at the start, that this is a long-term portfolio. So I think, if you want to have a portfolio which you want to keep for more than a year plus, then you have to have an high beta name in it. And commodities do need to find a place. And I think that going forward, things will look increasingly better for steel companies. Once this whole coal, iron ore, all this mining auction, all that is in place. And I think that Tata Steel is sort of best positioned to take advantage of that.
SKS Microfinance?
Very honestly, I like that financial sector services space quite a bit. So yes, I have a buy on SKS Micro. I think even from this level, if you're willing to hold the stock for a couple of years and things sort of fall in place for this sector, then this is a doubler even from current levels. But as I said, SKS Micro, you could buy a Manappuram Finance, Muthoot Finance. I think any of these stocks should fit the bill.
If I were to ask you to compare those three stocks that you just named to the NBFC housing finance companies, how would you place them? How would you rate them?
Possibly housing finance are better, but I think the run-up in them has also been sharper because, I think market sort of discounted a positive sentiment, say, for an LIC housing finance far earlier than it has done for a SKS Micro. So I think just from a going forward return perspective, I'm choosing SKS Micro, but I think housing finance companies are also pretty decent buys at this point in time. As I said, I like an LIC housing finance.
All right, I also have to very quickly ask you about L&T, and that was the lead stock in your portfolio up till now, which made sense because we are in a market where people are just assuming that the next 5 years are just going to be non-stop construction in this country. So tell us how Thermax makes a good replacement for something like L&T.
Well, I think, they've got a very good order flow at the moment. And I think that the kind of results that they've been delivering, as well as, what one has been hearing about, their facilities overseas, etc., also makes a lot of sense. So I think that, it makes a good replacement for Larsen, given the fact that Thermax really hasn't run up too much, so it has a better chance of giving a decent return from current price.
All right, a whole new set of stocks for Sharmila in her portfolio. Now, remember, she did say she just wanted a fresh set of stocks to look at. So that doesn't mean that the ones that were in her earlier portfolio need to be sold for whatever reason if you're holding them as well. And if you have any questions, feel free to write to us. Our email ID is at the bottom of your screen. I'm going to give you a recap of those stocks. There's Thermax, SKS Microfinance, Berger Paints, Havells, Lupin, Tata Steel, Century Ply. There's Ashok Leyland, ICICI and Persistent. That list is on your screen at this point. If you want one of us to email the list to you, send us an email and we'll be glad to email Sharmila's list of stocks. I'm going to quickly take a few more questions before we go into break. Kiran has written in 250 shares of GMR Infra bought at 26 rupees, 250 shares of JP Associates bought at 339 rupees. Should I hold on to both of them? What's your call?
So GMR I'm positive on. I think I've recommended also on your show and it had hit the target. But since then it's really not it's come off quite a bit and it's going through all kinds of trouble. But I don't think that the current price is the right price to sell. So I think that hold on to that. JP Associates I'm not so sure of, very honestly, because I think the kind of leverage book that they've got and we've heard that they're going to sell their cement. But I think cement was the sort of thing that was making JP Associates a more attractive stock in the first place. So I don't know how, once that is sold, what should one be invested in JP Associates for while they will bring down their leverage? Because you're not still seeing that turnaround come in the other part of their business. So to my mind, that doesn't make, and I think the loss over there is also less. So I think it might be a good idea to exit.
So if Kiran exits JP Associates at this point, what would be a good replacement for that in his portfolio? Maybe one of the stocks you talked about earlier?
Yeah, we've spoken of 10 new stocks. So I think any of those, whichever fits the fancy. So yeah, I think makes sense.
All right, so you can pick any of the stocks we mentioned a little earlier on the show. JP Associates might be a good point to get out of at this point. Hari Varma has written in 750 shares of Aban Offshore bought at 725 rupees. Should he hold on to that stock? Care upgraded the stock, but that doesn't mean he's going to recover the money he's lost so far. What would you recommend he does?
It's a little unfortunate because I think this stock is, coming out of its sort of financial troubles, which is why, they're getting rating upgrades from credit rating agencies. But the problem is that the crude is falling off. So, who really hires their rigs, so that sort of business visibility becomes a little blurred. Sure. So I think hold on. It's not a bad stock. They are now on a stronger wicket than they ever were. But you will have to, again, I think, as we discussed earlier, you'll sort of need to see crude stabilize at at a level, and only then you'll get a sense of how their business is going to shape up going ahead. So I think for the moment, stay put in Aban.
Welcome back. You're watching All About Stocks in ET now. Thank you for staying with us. Sharmila Joshi is still with us, helping us figure out our long-term strategy for our portfolios. It's time to take a look at the portfolio of our one lucky viewer. R. Subramanian has written in. He sent us a list of the stocks in his portfolio. He wants us to help him with which of these stocks he should be holding on to. Sharmila, some of them he's bought at what I think are all-time highs, but let's take a look at them one by one. 100 shares of Exide, which he bought at 178 rupees. You'd recommended this stock on the show as well. What would you recommend he does?
This I think is a hold, because I think that you're getting some clarity on this whole insurance piece, so that could be a positive for Exide. And overall, I think the battery business is also doing well. They are trading at a discount to Amara Raja, so hopefully there'll be a little catch up there again. So I think I'd given a target of 190. I think maybe you can extend it to about a 200, 205 kind of a target. So I think stay put in Exide.
All right. He also has 500 shares of GVK Power, which he bought at 14 rupees. That stock ended the week at a little over 9 rupees. Hold on to GVK Power.
I think the next two stocks, both are power. One
Yes.
is GVK Power and one is NTPC. And very honestly, I don't think it's the best place to be invested in. And, in a market like this, where stocks are doing well and, you are seeing stocks give good returns, it makes better sense to be invested in a sector because there's an opportunity cost now, in the market, which perhaps wasn't there maybe a year back or little more than a year back. So I think that it makes sense to just exit both the stocks and to altogether buy into another sector. I would recommend, I think if you're looking at it from a portfolio point of view, then look at an IT or a pharma. If you're looking at it from a slightly, churning sort of a perspective, then I think you need to look at some of the more active mid-cap plays within this in the market.
All right. So unfortunately, GVK and NTPC, which you bought at 284 rupees, you're going to have to get out of. Last stock on his list is Escorts, which he bought at 140. What would you recommend he does?
Again, I think a little unfortunate because you're not seeing very great numbers for tractors. And I think this is going to continue for at least another quarter. So I think be prepared to see even lower levels on Escorts from this. But I think post that you may want to, hold it. So if your view is of a year, I would say stay put. If your view is 3 months, then I would say exit.
All right, exit that stock as well. Unfortunately, we've completely run out of time on this show. If you have any questions for Sharmila, feel free to write to us. Sharmila, would you like to give us your disclaimer?
Yes, I think that it's fair to assume that I've obviously recommended all these stocks to clients and I may have a holding in some of the stocks discussed.
All right, that's a wrap on All About Stocks. Email ID at the bottom of your screen. Thanks for watching.